I have no idea if people can hear me. All right, you got me? All right, good stuff. It's up, so I'll wait for a couple minutes to get people in. All right, guys, I am in live on workshop stage. Got Nanya and Emily in. Appreciate y'all joining. And I have no idea about YouTube. We'll get started here in a few minutes. Guys, we're going to go pretty fast tonight, too. So I'm just going to throw up charts. I haven't even looked at them. I don't need to look at them. I will put up the OPM. Folks that are going to join us on YouTube won't have it, but I can post it in our subreddit when we get done. You see how fast it takes to flip over. That's probably usually the delay in YouTube, huh? Yeah, that's a long delay. So guess I'll have to slow down. I moved that up right when I started talking about it. Don't think I have anything on there. No bueno, right? Nope, we're good. Should be good. All right, so again, ITG members have this. And if you don't, it's posted up in the option pricing model in the contributor section. There's also discussion down in the trading channels. Option pricing model trades. Guys, we're in workshop chat room. So don't. I know the guys are trading in. I know the guys are trading in on the trading floor. So let's stick this out. Yeah, and let's go real quick. Again, highlighted here are the earnings. We got 8 of them this week that are on the OPM. Amazon, Google, Apple, Microsoft, Meta, and AMD. Obviously, these are technologies. And then Thursday afternoon, Friday morning, we've got Chevron and ExxonMobil both. So just kind of keep that in the back of your mind. If you're oil gang, ConocoPhillips, I think, is the day prior. And again, you can always use earnings. You know, if the financials are hitting on Monday and Tuesday, then the financials on Thursday are probably going to be very similar. So typically there's a ramp up into it. We're going to get into that in a little bit. But these are the big earnings. And again, on OPM, especially for the newer members, these are the index ETFs. That's why they're yellow. That number is as arbitrary as the day is long. It does not matter. It doesn't matter if it's a 213 or if it's a 17 or if it's a 63 for SPY. What matters is the comparison. All of these are compared with the exact same internals, if you would. The same, all the Greeks, all the ratios are set the same. And so what you're really looking at is, and embedded into this PVI is all of your implied volatility, single stock volatility, real vol and historical vol, and then ratios of each. And the ratios of each are really what make the OPM click. Obviously, it's really easy to look at price, delta, and theta. But again, OPM is set at a 15 delta, as close to a 15 delta as we can get. The prices are based on Friday's close in the afternoon. And again, obviously, we're up heavy overnight. In Globex right now, the Dow's up 0.46, ES is up 0.54, NQ's up 0.66, and Rusty's up 0.57. So again, with them all being up, it's okay. I mean, you gotta base it tomorrow morning anyways when the market opens. So let's just jump in and kind of look and see one over the world orientation on the chart. Anytime I am forecasting, anytime I'm looking at this is where price is on a daily chart, guys, 100% your gravity points, your daily Momo indicator, PWG Momo, and then your daily trend. Highly encourage it, right? If you look at this last week, when I told everybody, you know, if we didn't push up Tuesday, that we weren't going to get our call debit spreads were not going to make money for us. And then sure enough, what happened on Wednesday, we went red on the trend. The Momo continued to sell off. Again, we're still overbought on the weekly. That's what the dots represent. So what would we expect? Obviously, we're going to expect a move up this week into gravity point A and C. And here's our nucleus. Real quick, horizontal line. Get your ray out. Park it right in the middle of the two. I almost said something political. I don't know why it popped in my head. Oh, because of the overlapping circles. Won't do that. Yeah. Mute, vet. Mute. So again, I think we could see a bump up here. 58.70. And then to see if we reverse Momo. Again, the daily is your lines. The lines is your daily momentum. The dots are your weekly. Again, if you guys are Jezebel and y'all get down and start doing this on a 30-minute candle, this is not a 30-minute candle and this is a 4-hour or a 1 hour. That ain't how it works. These things are designed and optimized for the daily and the weekly. Again, if I flip this whole script to a monthly chart, I know what it is because I know all the settings. You guys wouldn't know. So if you looked at SPX on a monthly chart, would you say that we're overbought? Absolutely. The good thing about the monthly chart is A is over B and B is over C. So on a retracement, it's going to be somewhere the midpoint between B and C in the event that we get a significant pullback. You can see the channel that's still drawn there, the blue channel. We've been in it. We hit it August 1st. This channel was put in. Here's the top of the channel. So this channel was drawn on July 1st, and we hit it on August 5th, or August 1st and then August 5th. But going to the monthly, this isn't 2 months. These are monthly lines, but you don't have any idea what this higher time frame means. So stick with the indicators on what we've put out. Again, I know some of you guys want to get into, I'm going to create my own, and that's great stuff. But I'm just telling you, these things they don't shift down to a 15-minute chart. They're going to print something on a 15-minute chart. Again, go to a 15-minute chart on SPX and look at where the gravity points are. And if you go look at them a lot, you're like, well, I know what he says, but man, these gravity points are, they helped us out on Friday. Well, it's just coincidence. I know there's no coincidence, but there are 15 minutes. Again, I share with you guys a lot the trade station stuff that I do with the inflection points on the 15-minute chart. So, but I would expect, here's the 21 EMA, open, not closed, orange dots, 50-day simple, 100-day simple, and 200-day simple, right? And they're right here. 21 EMA, open, 50 simple, close, 100 simple, close, 200 simple, close. That's it. And then obviously the PWG weekly and on there. But we're just looking at it is that we're coming off a red trend, or we're in a current red trend. The momentum has been lower. The thing that's got me is what what triggers me about, everybody selling puts, and guys, you're big boys. You change your own diapers. But we went through 2 weeks ago, we never touched weekly demand, and that was bullish. This last week, we never touched weekly supply, and that's bearish. Now, where are we going to be this week? I don't know, but we closed last week here, which was below where we opened last week. So I would imagine weekly supply demand is going to split back down somewhere in this vicinity. We closed here. This is where we opened. So we're probably going to see a weekly supply demand here. If you don't know, go over to ES. You already got your ES levels, convert it. And again, with everything going on this week, 100%, guys, I would definitely get into your delta trades, the passive trades, call debit spreads at weekly supply, put debit spreads at weekly demand. We've already hit weekly supply on ES. We talked about that this morning at the open. So let's just jump in. Earnings. Shoot. I can't change this up because it doesn't change on YouTube real fast. I guess it's going to change on the voice though, right? By the time they can hear me there, they can see. I don't even know. So we're going to go through. I'm going to do Amazon and Google just because they're earnings, and we're going to go through them. But we're going to also go through the white. Again, what do we look for if we're trading option pricing model? Blue calls, blue puts, right? That's a blue strangle on NVIDIA. Boom. You already know there's one trade you need to investigate tomorrow morning. Now, if NVIDIA is up, 1.8% pre-market, and the rest of the market's up, 0.54, then you know this. They're gonna make you pay a lot more for those calls. Lam Research here. Lam Research 18 and 20, and Lam Researches are cheap. Super Micro. I didn't mark that down, but it might be another good one to trade. The reason I bring those up is because we've got so many technology earnings that are going to move. Had a gentleman in Reddit that reached out. Actually, somebody pointed me to them that reached out about Palantir. I shared with just the gravity points how I would trade Palantir for them. I don't know if they're on stream or not, but if they are, welcome. If not, no biggie. But I just go through, and again, he made a comment that said, Palantir usually tracks what NVIDIA does, and NVIDIA is probably going to track what some of these tech generals do. So again, the cheapest delta, the cheapest exposure on the long side and the short side are the blue OPM entities. Why? Because the statistical analysis that's embedded into that OPM number is less than half of what the QQQs are. So the Qs are 65, so everything 32 and less is trading at half the value, right? It's 50% off what the QQQ calls are. Move over here, 92, everything below 46. 44, it's not the right one. 45, just underneath on Oracle, but Oracle's not on the call side. But everything below 46 over here, the puts are half the value. They're trading at 50% off. Now, not 50% off price, they're trading 50% off value. That means they are way undervalued relative to the index ETF. Why would that be? Because we got all these damn earnings, and they're going to, and again, what are market makers going to do? They're going to bump up premiums. They're going to make you pay more, right? Watch this. PVI, SPY, and Qs, about the same number, 63, 65, right? Deltas are the same. Share price, QQQ is a lower share price than SPY by 82 points, the index, the ETF. But they're making you pay 91 cents instead of 70 cents for the calls. Well, why is that? Because of all these earnings. And so you're paying more for a call on a lower strike price. And so if you immediately would go, well, wait a minute. If I just looked at these two, I'd be like, oh man, the QQQs are way more expensive. I'm paying 20 cents more for a stock for a spot price that's 82 points less. I'm paying more for a lower exposure. But the truth is PVI goes through and starts pulling out the implied volatility and the ratios between your single stock and implied volatility and historical. And once it pulls through and sorts through all these relationships and all these calculations, it tells us not really. And so again, I look at them because they matter, the price matters, but what really matters is the values. And that's it. I mean, it's that simple. So what are we doing this week? I'd advise everyone to have a strangle on NVIDIA. I'd advise folks to have a strangle on Lam Research and a strangle on Supermicro Computer. Because both sides are blue. Now, do you have to play the 15 Delta? No. If you want to play the 25 Delta, be my guest. And based on this model and the historical volatilities, there's not going to be a huge difference between 15 and 25 Delta. Okay? But if you get up into the 30, 35 Delta trades, which a lot of people do, you'll see that 32 might now be relative to 65, it might be 41. Because as you increase the delta, all the gamma changes, all the Greeks change. And the volatility components start changing because you got higher open interest at higher elevations. And this tool is designed for just a comparison tool. Again, we're going to roll out other OPM strikes and delta configurations to compare each other to, but just please know that. All right, I'm gonna move this so we can crank on just stocks. So first one we got is Amazon. So here's Amazon. I mean, again, this is just me, but guys, I've been doing this for a long time. Boom. ABC, are they stacked? No. Is there anything negative here? Yes. B gravity point has a negative. That's an anchor. Okay, so then I would turn and I'd look up here and I'd mark them. I always mark these. If I'm going to trade a stock during the week, I mark them on the weekends because I want to know what they move to on Monday and Tuesday. Those gravity points are going to move. I want to know where they were this past weekend. Why? Perspective. It helps my perspective. All the yellow is on the PWG. On your weekly levels, it's just your conservative low, conservative high. Basically, your PWG level from last week. That's all it is. So don't panic. I just got it. The reason why I put it there is, again, You all have to do this. Before you go and buy Amazon and trade Amazon's earnings, you're an absolute fool if you don't go look and say, okay, when Amazon breaches weekly supply, are we bullish? Are we semi-bullish, or does it usually just run like a scalded dog? You got to know that. How many times do we break PWG? Does Amazon? If you don't know that, trading it doesn't make a whole lot of sense. I mean, here, we breach conservative. Here, stayed in the box. Here, we breach conservative. We're never breaching to the downside. Actually, here we breach conservative and we gap down. I don't know what happened on the 31st of July, but man, Thursday we sold off, back to supply, wicked all the way down, almost got to demand, and then we had a huge gap down on Friday morning, the 2nd of August. Oh, that was the big drop. Here we breached. And the only reason I want you to know that is you need to get in the habit. I mean, here, look, we met it. And look at that bottom wick. I mean, it's beautiful on a Thursday, 25th of April. So having your PWG levels on there, man, if you're trading Amazon, they're respecting it here. Don't touch it. 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 These are all PWG/PVI wins. Wins. Oh, clinch city, right, on Thursday. Came back down on Friday. This is just PWG, not PVI. And then thanks to OHT, again, on this weekly script, look over here. Long rotation, short rotation for Amazon. It's still 1.9. So where are we now? I would say, just me looking at Amazon real quick, and this is how I do it. Here's my gravity points. I need to know where they are. If we miss earnings, if Amazon misses earnings this week, you know it's going to work back to B. You know it is. And then you go to OPM, and the put strike's 172. 172.5 is the put strike. What happened there? Put it on your chart. Leave it on there for the week. And you give yourself an idea. Call side was what, 202? 205. That's way on up. So then you're looking at it. Okay, then what do you notice about Amazon? Well, we had a gap down here. I got to make it smaller. We had a gap down. Again, fib structure matters. There's two that I would do, that I often do. If I'm putting money in it, I do a lot, right? Run a fib from the low to the high. Or the high to the low, it don't matter. The 1618 is going to be way up there if you run high to low anyways. So it's not going to be matter. But then you're looking at 195 and gravity point C at 196. There's a really good high probability we're going to go back and breach. Why did I draw low to high? It's just swing low to swing high. That's it. Most recent swing low to swing high. And then when you look at it, look at the halfback. Again, you're always the most recent swing low, most recent swing high. The halfback, it's not a Fibonacci number, right? 50% is not Fibonacci, but it's a number that you need to know about. And then you look over here and you see how we had support. This wasn't the 50% line because the 50% line is drawn off here. But we had a little bit of support in here, and that matches up with the 50, and that matches up with OPM on the put side. So, again, I have no idea what Amazon's going to do earnings-wise. They're orange on OPM. Now, the best trades on OPM are your blue trades. And then the next best trades, or arguably the top trades on your OPM, are earnings candidates that are white. And white just means they're undervalued. They're undervalued. They're not 2 times, but they're undervalued. That's AMD. That's Apple this week. They have earnings, and they're undervalued relative to the Qs. Those are your best exposure trades. Again, Lam Research last week, NVIDIA last week. NVIDIA was just a win, wasn't an earnings trade. Lam Research was a huge earnings trade. and it was white. And that, again, that's why I did it. And again, we took what the one, so NVIDIA, Lam Research, the last 2 weeks, I mean, it went from 83 cents or 86 cents to $15. Okay, spreads at, so POTUS just said spreads at 15 delta on Lam Research make it unfeasible. What does that mean? Because I printed $26,000 on Lam Research in the last 2 weeks. And I never traded more than 10 contracts. So your comment about 15 delta, and I'll show you. I don't even know if I got Lam on this. I don't even have it on this. So we hit both last week and the prior week. Prior week was put side. Last week was call side. It was stupid money. But it was just an OPM trade. I mean, look at Lam Research right now. Again, 2 anchors, right? Negative sloped gravity points means that's it. That's it. I mean, we usually don't get higher than that. Lam Research this week, the call side is set right at 82.5 with gravity point C above it. Can Lam Research get back to last Tuesday the 15th high? Absolutely. And that's at 85. Lam Research is, again, the call side is going close for 29 cents. Let me see if IBKR has it updated. Yeah, the call side right now on Interactive Brokers International is looking right now 27 by 32, and the put side's looking 30 by 48. Now the put side's got some, there's a big spread there. But regardless, on our chart we had 32 and 29. So you're talking basically about 62 cents to secure, longs. The puts are 73. Again, when OPM puts are below the gravity or inside the gravity points, I trade it. I mean, it's just why? Because if it comes off, if earnings are bad on the tech generals, Lam Research is going to come close this gap. Well, where's the gap? 73.38. Do I want to hold the 73 puts for 32 cents? Yeah, with 2 gravity points down here, with them being overbought on the weekly. Again, it disappeared. The daily's getting to an overbought scenario. Can it come back down if earnings are bad? Yeah, I would expect it to give me a move. And again, you guys, you got to understand, if you're putting money in the 15 delta slot machine, you're going to lose 85% of the time. Again, I highly recommend putting a couple quarters in so you have multiple contracts so you can get risk out of your trade and get your trade paid for, so you're holding runners to Friday that are completely free, especially this week. Jolts, we got quarterly refunding tomorrow. We got Jolts Wednesday. We got PCE. We got non-farm payrolls. And then we've got Amazon, Google, Apple, Microsoft, Meta, and AMD earnings. And this week is going to be outrageous. So this is going to be the week that most people that are selling Theta are probably going to have an opportunity to feel a clinch and release and clinch and release and a couple of them. And you might get them more than once. So again, that's Lam Research. And so again, I think the OPM on it, just based on what we see right here, I think it's a good trade. I'll put some on tomorrow morning at the open. Let's get back to Amazon. Let's go to Google. Oh, the other thing, yeah, I drew the fib. Yep, you're good there. Google. Again, if you don't have a recent swing high or the recent swing high is here, then there's nothing wrong with working an extension. right? Go back to the previous swing high to low. Did I miss something? Yeah. So if we take out the previous swing high, you see the double top here. If we take that out, that again, from this move here to here and then the extension, we're already hit the 1618. We've already double topped there. Again, I look at this and going into earnings, when you see a stock going into earnings and all three gravity points are neutral or positive and there's one or two above spot price, I always lean long. I always trade into the gravity points. Like right here, what about Google? And I know everybody's bullish, but what about Google? Well, I got two negative gravity points. I would not play calls by themselves. I would only play strangles. Now, here's one. When the option pricing model is orange or red, does it mean you don't trade it? No. Red is just 2 times the premiums. Okay? The excessive premiums are so inflated on that single stock because of the volatility component. The premiums are so inflated that they're charging you more than twice the value of what the Qs are. So if you have to trade red because you absolutely are horn dog and that's your favorite stock and you got to trade it for earnings, red just tells you with the excessive premium, trade it as a debit spread rather than a long call, long put naked spread, a naked strangle. Put on a condor on it. But a long condor to where you're long short side, close side, and you're short. And by doing that, you're diversifying away some of the excess premium in the trade. That's the only way to get rid of the excess premium is to spread it. So if a normal trade, if the Qs are adding up and you should be trading about $2 and let's say Meta this week because of earnings, Meta is trying to charge you $4 for the same trade, then just go in and find a debit spread that's going to cost you about $2. And yet you don't make as much money. But your number one job is mitigate risk. Well, in options world, there's risk in the pricing. That's why theta works. Theta, especially at the money, theta works because all of the pricing in theta at the money is based on a 50 delta, but 100% of the premium is time value. And again, Moose does it, Case does it. That's their baby. So again, in the event that you don't have a clear swing high, swing low, and we're in the middle, then rather than to go here and draw a fib retracement, work a trend-based extension and you just go to the previous low, to the previous high, back to the low that covers the whole range we've been in since when? Last August, the end of August. And the fact that that's at the 1618 extension, that's a little concerning. They've already double topped it. Again, this line, if you trade Alphabet, Google, this line was already here. Again, a great place to peel longs is when we come up to a fib tool, to an extension. But with 2 gravity points being negative, I'd be a little bit leery on that one. Again, until Thursday was overbought on the weekly. That's what the dots represent, and they've been overbought on the weekly. The daily still looks like it's trickling down. Friday, we had a push higher. Are we going to go back up and take it? If we take out 170, we're probably going to run towards gravity point C. I don't think we'll get all the way there this week. And then I go down and I look, and sure enough, the 15 delta on Google is at 182. And the gravity point is sitting here at 179.5. Interesting. Very interesting on Google. Again, it's orange. I wouldn't necessarily buy longs on an orange stock. If you don't have to, work it with a spread. It's going to be a little bit more favorable. NVIDIA, it's not an earnings. Let's do Apple next. We'll run to Apple. Again, look, anything negative on Apple. Nope. Positive, positive, positive. How many gravity points are above us? 2. We know this is Apple's all-time high, right? Here's our all-time high price. Gravity point A is at all-time high. Just underneath it at 237. The Apple calls that OPM's given us is 242 at a 15 delta. The top gravity point is 245. Could it shrek up there? It could. It won't hold. It won't stay up there. So Apple would be one. If you hit earnings and we open up at 242, 244, I would close that trade real quick, those options. Because we're probably going to come back down to A. Even though they're both positive, I would lead long. Again, I'm not going to bother SL about, Apple earnings. I don't need to. I'm going to look at this. Apple's not overbought or oversold. Apple's correcting from starting to get into an oversold on the daily. In the event that Apple ticks down early this week, sorry, my pups are fighting. In the event Apple ticks down early this week, 226, 226 half, I look down. The Apple OPM is all the way down here at 200. No, it's not. 220. So OPM's going to take us down here on the put side. Again, I don't know about down here. Swing low, swing high. It's hard. You can't do a retracement off of a high. You can work this. If you look at it that way, where we're going to get to, 225, gravity point C, the bottom one, that's where I would target Apple to. I wouldn't go a whole lot further than that. Again, with all three of them being green, being positive slope, positive slope, positive slope. Now, are they stacked A, B, C? No, they're not. So, again, short term, this would tell you we're red right here, but we started bouncing and putting in a bottom on Thursday. Last Wednesday, Thursday we moved higher. Friday we one time framed up. On the daily, we're still underneath Wednesday's high, but this is Apple for me. It's going to trade in this range. When earnings hit above this range, we'll probably work into there. Below 225, we're probably going to work down to 220. So, again, when OPM is at 56 relative to the QQQs at 65, there's value there for the same spot price. On the put side, it's 64 versus 92. So Apple puts are more fairly valued than QQQ puts. Which means if Apple misses or bad news comes in and Apple starts dropping, you're going to get paid more money per unit of risk selling OPM, trading OPM trades than you are trading QQQ. And then you've got the leverage in the options that you don't have in the futures market. And again, options can be a combat multiplier for you. They really can. But you got to know how to wield that sword. What's next? Microsoft. Again, Apple was what? CAB? Positive, positive, positive. Microsoft, not so much. So when I look at this, if I'm just looking at earnings, and you give me a symbol that I've never heard of, and I don't even know what it is, and I type it in, and this is what it's showing me, and they're like, hey, what do you think about trading calls for earnings? And I'd be like, well, 2 or 3 gravity points tell me it's probably going to go lower. Now, does that mean we spike down and then we move back higher? Maybe. Or do we spike up and then we start coming back down after earnings? Maybe. Again, there's no, you got to know Microsoft. You got to know how it responds. Does Microsoft respond to PWG levels? Even more so, if you want to trade shares or you really want to get in the weeds, your homework is literally, guys, this is homework. I would go and look, and we do this with NVIDIA all the time. Again, weekly supply demand, buy sell triggers inside it. Above it is R2 and above it is R3, weekly R3. Below it is weekly S2, below it is weekly S3. You got to know if this stock Does it honor weekly R2? Here we broke it. We came back down to it. How many times does weekly R3 get breached or S3? Here we breached it on Microsoft. Here we really breached it on Microsoft. Here we tapped it on Microsoft. Again, so you start looking at Microsoft and not for the last 5 weeks. You go back, and if you want to trade Microsoft and you want to be Mr. Microsoft, and you want that to be your forte and you want to specialize in it, you need to go find how many times it fails weekly R3 or S3. Because you know what? The number of times it fails S3 and R3 tells me that's when OPM is in the money. OPM is in the money. OPM is in the money here. OPM was in the money here. OPM was in the money here. OPM was in the money here. Now you start to see it and you're like, well, damn, Microsoft's usually orange. Sometimes it's red. In the money. In the money. If it's anywhere close to weekly R3, or we get a close like this close here Wednesday above weekly R2, OPM was 100% in the money. Hold on one second. I had to whoop some puppy ass. Come on. Come on. Sorry about that. And so you just got to understand and see how many times these stocks break out. And if you're not willing to do the homework and go back and pull the weekly data to see how many times we hold weekly R2 and S2, R3 and S3, how many times do we violate it, then you literally have no idea if you're making a smart trade or not. You're just going to trade off the statistical analysis of OPM, the fact that, hey, Microsoft has value this week, so it's cheaper than QQQ, so we should trade it. Well, yes and no. Again, the OPM is a comparison tool. It's not giving you anything other than, is Microsoft cheap or expensive? Well, it's expensive. It's more than twice the premiums that the Qs have. Well, that's okay. That doesn't mean it's a bad trade or a good trade. That just means if I'm playing long options, calls and or puts, I'm spending a lot of money. I'm basically traveling on 4th of July. I mean, I'm traveling on Christmas. That's the expensive time of year. And that's what happens around earnings. And so, again, market makers aren't stupid. They're going to make you pay. The reason they lift gas prices up around Memorial Day, right? Everybody's traveling. Gas companies aren't stupid. Now, the ones that do it around hurricanes have issues with the federal government. But, again, everybody's trying to get their piece. The house doesn't lose in the market. So, again, Microsoft having 2 underneath it, Microsoft in a daily overbought scenario and correcting, we could see Microsoft drop down. Again, Microsoft's not going to drop down to gravity points A's and B from 428 down to 413. Microsoft ain't going down to 413 if the QQQs are up 0.69% right now. That ain't happening. So again, understand the individual company within the broader scope of the market as well. Microsoft's green with dots. Again, green with no dots is a great time for you to play long calls. Green with no dots and Microsoft opens up and we're above Omar, we're above the over-under, we're above VWAP. If you have a green daily trend, man, 100% get long. Just understand that they're charging you a lot of money for the calls and puts on Microsoft. That's the way dealers do. What else is next? Meta's not going to be any different than Microsoft, but I just want to look at it because I want to see. Now, how many do we have above us? 2 above us. 2 positive, and the one below us is not negative, it's positive. A positive slope or a flat slope, that's support, guys. I mean, seriously, you can literally look at this chart and go, you know what? Here's resistance. If it squeezes above it, you work to the far right, the top data point, 606. If you go to Meta, the calls are at, OPM calls are at what, Meta? 640? Holy moly. Gravity point A goes to 606. Again, they're going to charge you, right? 291 to 65. So they're going to charge you over 400% more premium. Not price, premium. QQQ calls are 91 cents. Meta calls, 15 Delta, are $4.10. They're going to make you pay to play. And the Greeks tell me in OPM and the PVI, the Greeks tell me that's not worth a trade. That's not a good long trade to trade. So if you're a person and you say, hey, I want to play lotto, I want to play lotto calls or lotto puts or both on earnings, my God, go do the blue stocks. Or go do the white ones with earnings. And that goes to our next favorite this week. And I think it's going to be a banger. It's AMD. And AMD's got a lot to work with, right? We still have an open gap back here from July. AMD is going to be a banger. There's to the downside. Nowhere near 144 AMD lows on OPM is sitting at 142 above gravity point B. So if we miss that, you got some money there. And then the bigger one is going to be here. Again, if we hit earnings, it's going to go back and we're going to go close this gap. I guarantee you. 175 and AMD calls for earnings is 172.25. So just above the top end of gravity point B. But again, if you're just using this extension tool, boom, low swing, recent high swing, back to lows. It shows you where the 1618 will be down the road. This isn't a trade it this week. That goes all the way up to 200. We ain't going there. But we can certainly get up into the upper 170s. And 172.5 is AMD's to the call side. So why would I trade AMD? They've got earnings and they're white. But I would not. With B being down here, again, there's a high probability AMD will trade 166 this week. Mark it. It'll trade 166 this week. Now, is it going to trade it before earnings or after earnings? Cross between an elephant and a rhino. Hell if I know. But it's going to trade towards there. Why? That's like your point of control on your volume profile. I mean, this is where the institutions are interested. Now, are they interested in selling from here? I don't know. Are they interested in buying here to work back up to all-time highs? I don't know. I don't have those answers. And I don't think anybody else does. We have been overbought on the weekly, and it just disappeared on Thursday, as did Apple. Daily is down here in the oversold range and correcting back, and we got trend on the daily is working green, no dots, and since last Wednesday, we have one time framed up. There's a high degree of probability that AMD is going to go fill this gap right here at gravity point C. They're both positive. A is really positive. C is flat to positive. And again, this becomes a bullish trade towards here. This becomes a bearish trade. Super obvious. OPM gives you the numbers that are inside there. 142, 172 half. 172 halves were 118 on Friday. That's freaking expensive. But not arguing with it. Again, I don't know why, but OPM they've done the Greeks for us. But 172s were 118 on the call side and 129 on the put side. Pretty expensive when you go and you look at NVIDIA and you're like, well, I could get NVIDIA exposure for a lot less money. I'm only paying, on NVIDIA, you're only paying 69 cents instead of $1.20. On the put side for NVIDIA, you're paying 80 cents instead of AMD $1.30. So you're getting about 50 to 60 cent discount trading NVIDIA versus AMD. Why? Earnings. And if you didn't know there were earnings this week, That's why NVIDIA's blue and AMD's white. I don't post those trades. I don't post my OPM trades. One, because my risk tolerance is nowhere near what you guys' are. And the last thing I want is any of you. Do your homework. I mean, you got the same stuff I got. But the last thing I want is me sharing what I'm doing and a $20,000 account take the same number of contracts that I'm taking with a $3 million account. I mean, that makes no sense. That's like, somebody in PDT trying to do cases strategy. You don't have enough bullets. You can't do that. And so again, I talk about it. I mean, I'm talking about it right now. So they will. Okay, good point. They lose more money than they win. Yep. So then you go look at AMD. How many times do we breach weekly supply demand? We didn't breach it last week. We crushed it 2 weeks ago. Again, 2 weeks ago, that comment you posted, POTUS, is full of shit. Because 2 weeks ago, AMD put side made you about $700, $800 per contract. Last week, Lam Research, literally the last 2 weeks, Lam Research has made $1,800 per contract. But again, you got to go and look at them and pull. You guys know how to ask Nick. Nick can show you how to pull this data and import the data from the weekly levels, import the data, run it to Excel, and do some back testing. How many times? I don't know, but guess what? If you had puts on this week in AMD, 17th of July, you made a fortune. You made a fortune the next week. You made a fortune if you got out of your calls on Wednesday. And if you held them, you made a fortune on your puts on Friday. If you closed your calls and you opened puts, you made a fortune. I mean, I'm sitting here and I hear your statement, but I'm like, okay, OPM 1. If it gets to R3, it wins. If it gets to S3, it wins. OPM 1, OPM 1, OPM 1, OPM 1, OPM 1. OPM 1 on Monday. Now, we opened right down here, so I know you could get into the trade because this was RTH open, not futures. OPM 1. OPM did not win. OPM, you might have made money if you sold out on Wednesday, but you probably didn't win. You made money here. You made bank here. You lost money here. That push on Thursday, you probably lost money this week. You made money you lost money this week. You made money this week. Again, it's usually Wednesday. If Wednesday we hit below R2, there's enough movement, your premiums are covered. It's a free trade. That's why I don't trade one. Trade two and get risk out of your trade. Here, you made bank. Last week you lost. So, I go back here, POTUS, in your comment, going all the way back to July, there's only 3 weeks in here you didn't make money trading AMD. So you can't say that you usually lose money. The ideas is in the damn spreadsheet, dude. It's the 15 deltas. It's the option pricing model. I mean, I don't know what more you guys want. The trade is right in front of you. Are they good trades or not? Okay? A couple weeks ago, I had on 5 different OPM trades. 4 of the 5 didn't make any money. The 5th one made enough money to cover all the premiums. And again, this is why I do the strangles, because I don't know where the market's going on Monday. And if it's blue, Lam Research, Supermicro Computer, NVIDIA, if it's blue and the market is not gapping up or down tomorrow morning, you can almost bet assured that I have at least 5 contracts on every one of those. Why? Because if you win one time, again, going from 80 cents to $15 2 weeks ago, now you got $15 recycle profits. And then we made another $11.50, $12 this last week with NVIDIA and Lam Research. And so now 86 cents went to $15, and then a portion of the $15 added another $12. And so now, I mean, it's the damn, I started with a paper clip, and now I'm getting ready to buy a boat. And I didn't put any more money in the machine. And all I'm doing is recycling profits. If you didn't make any money last week, then be Gail Martin, not Martin Gale. Be Gail Martin. If you didn't make any money last week, start with one. Do 2 contracts on each of them tomorrow. If you're in PDT, you can't do it. That's not fair, because they don't have the ability to get in multiple contracts and then close out the contracts. So it's not fair. We got a lot of people, a lot of members in PDT. And again, you got OPM. It's there. I posted it yesterday morning. It hadn't changed. It won't change. Go do research. I mean, I hate to say it, but you guys got to pick yourself up and kind of got to take ownership for your own trades, your own due diligence. Again, NVIDIA, if you do not know, does NVIDIA honor weekly R3 or not? Does it honor weekly R2 or not? You need to know that, guys. You need to be in a habit of looking at it. Why? You want it to give you money. Then you go court it. Go date it. Go take it out for tea. Buy it coffee. Get it some ice cream. Read it bedtime stories. You do whatever the hell you got to do to make money in NVIDIA. Look at NVIDIA. Where is it? At all-time highs. And the concern is that we got all-time highs. Absolutely, Hondo. I mean, like pillow talk, baby. Whisper sweet nothings. All-time highs, and we got a negative gravity point on NVIDIA. Dun, 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 dun. Weekly's overbought. What do you mean if you trade it daily? Why would you trade it daily? Here's what I would tell you. You got OPM on the weekend. Go do your due diligence and your technical analysis on the 5 or 6 stocks you're interested in because of OPM. White with earnings or blue if you're going to go long. If you're not going to go long, a completely different precipice takes front and center stage, right? I'm going to sell red OPM trades on the opposite side of wherever we open. So I look tomorrow and I see right now, Meta ain't doing earnings until Wednesday. I can sell Meta calls tomorrow. If the market's red, Meta has got the highest OPM. I can trade them tomorrow. I'll sell them tomorrow. I'll sell red tomorrow, Meta. If the market was red. If the market's green like we're expecting, tomorrow morning, I'll sell the Meta puts, the 520 puts, way down here. But I'm going to cover them before tomorrow's close. Or I'm going to dang sure cover them before Tuesday's close because Meta has earnings on Wednesday. Is anybody chatting on YouTube? I don't see it. So if there is, somebody's got to buzz me so that I know to answer them. So again, if the market's green, you got no problem selling red OPM puts. But don't hold on to them for the whole day. Or I mean, if you get profitable, what do? I sell puts a lot of times in the morning, and then all of a sudden we run up, and then what do you think happens as soon as we take out micro low? I cover the puts. We get up, we push higher, we get into 11:30, 12:05, the market's bullish expansion, a green day, and we're up 0.5%. As soon as we break micro low, I cover my puts. Win, lose, or draw. Don't even care. I do it all the time. Almost daily. But again, I built this system. And again, you work, you manage a portfolio this way. Back to NVIDIA. Again, concerning the fact that we're at all-time highs and we're not A over B and B over C. And A is actually negative. That's not a good thing. That's like the 200-day moving average is above the 100-day moving average is above the 50-day moving average. And the 50-day moving average is sloping downward. That's not what the gravity points are. But where are my moving averages? Where'd they go? I don't know. Anyways, doesn't matter. But so now we're in a spot where that is not a good design. Structurally, the architect screwed something up with the foundation of the house. If you're a single-story home, you might be okay. If you're a two-story house, you might have some trouble. When this happens, you're building a 3-story house, you got problems with the foundation, and oh, by the way, you're in a freaking high-wind hurricane area. That probably is not going to end well for you down the road. And that's what happens, and that's why I'm the conservative guy and apologize. This is why I would not be selling puts. It'll work. Case will make it work, and he'll work it. That is not the easy trade. It has been. I don't see it being the easy trade. Matter of fact, again, you guys know in July, I basically went all cash except for what I have a zero cost basis. And I'm just trading for income now. I have no growth and accumulation in my long-term portfolios. I got the stocks that have a zero cost basis. But they pay dividends and I collar them, so it doesn't matter. But that's just where we are. NVIDIA is, again, oversold on the weekly, and the daily is coming down. So in the event that the market does turn red, NVIDIA is going to, because you know this, NVIDIA is going to come down to B pretty quick. So we might get a 142 down to 132 move pretty fast. And if we have bad earnings on Wednesday, it's going to go past 132. It's probably going to go down to 125. So then I look on OPM, and OPM's got 133. OPM's got 133 as my put strike. So I'm like, wait a minute. I can get into a less than half the value of the Q's put side exposure, and that's going to keep me above 2 gravity points. Inside 2 gravity points, that's hells to the yeah. I don't know, POTUS. Again, if you don't know it, how the market, how that there's a reason why the option pricing model was even smaller than it is now. Because I knew every one of those stocks. And I knew whether they went to weekly R2 installed, to weekly R3 installed, or weekly PWG installed, or if they had the yellow boxes where they often would breach PVI intra-week. Now that it's expanded, the lower half, Oracle I don't trade, ServiceNow I sometimes trade, Snowflake I don't really trade, Palo Alto you guys know I often trade, Lam Research I trade a lot now. Why? Because they're in a different option category. They're cheap. They're really cheap. So what cheap options do is they give you discounted exposure. If the QQQ goes up 1%, Lam Research is going to go up 1%. If the QQQ is giving you a 65 numeric for OPM on the call side, and Lam Research is giving you an 18, then I'm going to get a 3-to-1 or a 4-to-1 return per unit of risk. That doesn't mean I go buy 4 times as many. So again, you just got to know. I often, as you guys know, let me see how long this will take to come in. I can't share my screen in Workstop Shades, can I? Does anyone know? I guess I can try. I didn't think about it. Shoot, I can. You guys couldn't see me drawing and marking on these things, could you? So again, if you're looking at OPM, and I'm like, well, wait a minute, Lam Research is going to give me an 18 versus 65 on the Qs. Lam Research is going to cost me 20 value versus 92, right? 4.5 to 1. Like, if you don't have Lam Research, is it going to lose? It might not make money. You might not make money. You need one out of every, you got to figure it out yourselves, but I tell you, you need about one out of every 10 trades to hit, and you're breaking even or better. And if you get 2 to hit in a given week, you're way ahead. And that's why I tell everybody, if you want to buy exposure, the blues are your cheapest exposure. I would rather have NVIDIA than Lam Research, and I would certainly rather have NVIDIA than Supermicro Computer. But the probability and statistics tell me don't discount these guys. Lam Research has made a lot of money the last 2 weeks. So why not keep trading it? You know? And then to flip around and be like, well, if Meta has earnings on Wednesday, and the market's going to go higher tomorrow, I can get $4.96. All I know is this, is with that theta right there at 1, Meta, I don't care where the price goes, if the market is green, that theta is going to come off regardless of earnings on Wednesdays in a more favorable way than selling an AMD or selling a ServiceNow with a 57 theta instead of a 1 theta. Even though Meta has earnings, their premiums might stay up, but the theta decay will tick down. And again, if the delta is the same as the rest of them and the market goes up, what's NQ up now? 0.61. It's coming back down a little bit. It's up 0.61. You're going to see this premium decay tomorrow. Maybe not 50 cents, maybe 25 cents, maybe 30 cents. But the one thing you know that's not going to happen, if the market is green tomorrow, those premiums will not rise. So when I sell red, in the event that I'm not sure, then, and I get a favorable day, I would not do it during the earnings week. Then I would come down and let's say this wasn't earnings week and Meta was clearly the highest puts and calls on the red side. Then I would go look at the stock. And again, I want to see where those gravity points are. And the best thing in the world is for Meta to be in the middle of gravity points and the gravity points to be inside OPM prices. And then I would sell the 640s and I would sell the 520s. And I would take $4.96 for, say, $5. And I'd take $4 right here. I'd take the $9. And I'm going to go shopping. I'm going to sell 15 Delta. And I'm going to go over here with my $9. And I'm going to say, all right, we're going to load the truck up with NVIDIA. And I'm going to buy some Tesla. Nah, Tesla's too expensive. I don't want to buy 150. I'm going to get some NVIDIA. I'm going to get a bunch of NVIDIA. And I'm going to go down here, AMD. I might buy some AMD. I might buy a Google. I'm going to go down here. I'm going to get me some Lam Research, some penny stocks. I'm going to get some Supermicro. And before you know it, I'll have about 85 long Delta against 1 short 15 Delta. So that even if Meta runs 6% and the rest of the market only runs 3% times 85 Delta, 6% times 15 Delta, do the math. If it works in your favor, you made money. If it doesn't, it's a scratch. But if you're long 85 delta and short of 15 delta, you're not going to get hurt. Now, you do that with Bitcoin, you're going to get hurt. If you do it with, you're selling, Coinbase has earnings this week, I believe. And the market runs, like Netflix, 200 and some points, and you're long non-earnings companies and you're short an earnings company and it blows out 200, that's on you guys. I would never sell premium on an earnings stock. That's why, again, Hondo made the comment. Seems like we're buying, you're buying blues. And again, that's the best way I know to play earnings. This is the cheapest way. I mean, if earnings go up, NVIDIA calls are going to print. If earnings are bad and the market drops or PCE is bad, you don't really want to wait to non-farm payrolls, because by Friday, your all the premium is out of your option if it's not in the money. But it doesn't matter if earnings are good or bad. You got NVIDIA as a bookend on either side. Guys, I would not do more than one or two if you've never done this. And if you do two on NVIDIA and you pay 80 cents for the calls, or 80 cents, let's say you pay 75 for the puts and you pay 75 for the calls, straight across the board. You put in $1.50. So we got $1.50 in. Times 2. So you got $3. You got $3 in NVIDIA. Well, as soon as you can sell one for $2.25, you got 75 cents left in your trade on the table. And it's not free, but man, 75 for both sides before earnings. If you can get that done before Wednesday, I look at 75 versus 130 on the Qs and 90 on the call on the Qs calls, and I'm like, okay, 220 for QQQ for earnings or 75 cents for NVIDIA for earnings. I mean, check please. I mean, this is how you literally can deploy capital and generate wealth just by trading value. That's what these market is. I've been doing this. Again, I think we're going to have plenty of time this week. So there are two things I don't do, guys. I don't post these OPM trades to you guys. I do share them with NDX guys often. And I don't post 0DT. As you guys know, in the workshops, Nick posts every morning. He posts cases, daily SPX ranges, and his own daily SPX ranges. If you can't take those two ranges and overlay them with your weekly PWG level and a market profile, market structure on your chart and kind of determine what to do, you shouldn't be trading 0DT. It's that simple. And I don't do it because literally, man, when I sold the 5880s Friday, and then Nick came on and said, win 5,900, I'm like, oh shit. Now, in my personal portfolio, I did 15. PVI, I did 5. But if I'm trading 15, that means I've got to trade 30 ES contracts to 100% hedge. It's Friday. It ain't like there's any time decay that's going to help you. So if we ran to 5,900, I was going to have to long 30 ES above 5880, the equivalent of SPX 5880 equivalent. I'm just going to be straight up honest with y'all. If we're breaching it and I'm in the weeds, I don't give a shit about your portfolio. I got 30 contracts I got to manage. I ain't got time to hold your hand, to change your diapers, or to give you a pacifier. That's why I don't share it. It's risky. I'm trying to generate premium, and I'm fighting. I'm going mute. I'm taking breaks. I'm quiet. I'm not giving advice, and I'm not answering a whole bunch of questions. And it's not fair, but again, this has been my career. And so, I mean, it's like you being in the weeds and you got 15 minutes for a big deadline at your job, and I call you wanting to shoot the shit. You ain't got time for me. And so I just, again, I have to set parameters. Otherwise, I literally will sit here and I'll be on stream and helping 18 hours a day, and my family life and my health and my marriage, and will just be absolute disasters. And so, again, like a pastor, man, if they're not healthy, their church isn't healthy. If I'm not healthy, our group's not going to be healthy. You guys know when we're just killing it and everybody's happy. But man, when it gets tough and I have to stay up till 2 o'clock in the morning and I'm back up at 5 o'clock in the morning, and Israel's launched, missiles back at Iran, and PVI's breached on a Thursday night, and we got people like, damn, man, I screwed up. We had one member. I don't even know how they did it. We had one member that had 8 contracts sold and only had like $80,000 in their account. Like, they sold more SPX than I thought you even could. And I'm sitting there going, well, the PVI portfolio's got $200,000 in it. I got plenty of room to take a loss. I got plenty of room to inventory. If I gotta over leverage ES contracts and take inventory and then turn ESs that you held to hedge your SPX, and you got out of SPX, PVI okay, and now you got to inventory them. Now you got to start wheeling on those ES contracts. Again, I don't want to share that with everybody in here, because I don't think the majority of you guys are ready for it and can handle it. And again, you get into a bad option trade and you roll out to next week, well, you just might have made a bad problem a whole lot worse. And then what do people do? They didn't quite get the credit they wanted, so what do? They sell a little bit more, and then you're Martin Gale. And now you're adding to a bad trade. We have no idea what election week holds for premiums. We don't know. Why on earth would I want to roll a contract from last week to next week when I have no idea what the data tells me? Right now, I pretty much know what the data tells us. So I'm excited about NVIDIA, though, guys. I think it's going to be a good, cheap, again, if it's blue, it's undervalued. Now, does that mean it's going to win? No. So you do not go, well, I think I could afford to lose 2 strangle contracts on, say, NVIDIA, or 2 on, let's say 1 on NVIDIA and 1 on Lam Research. I could afford to do 2. Well, be honest with yourself. If you can afford to do 2, do 1. And if you only can do 1, you're not going to be able to get risk out of your trade, because you can't cut it or you can just cut it as soon as you make profit. You can get into a trade for $1.50, and as soon as it gets to $2, you make 50 cents. You get out. You got a 30% return on your trade. You get out. You wait for next week, and now you got $2 to put into premiums. And again, if you got 3 candidates, you better go figure out which one of the charts is going to give you the most favorable return on your investment. And that's the one you trade. And 2, you can get to where you can trade 2. And then when you trade 2, you sell 1 for profit and get part of that trade paid for. And then the rest, it's a win or lose. It's a ride or die. It's going to 0 or it's going to make you money. Now, you can still take profit on it, but I would advise people not to cut the trade. Because, again, anything can happen on a Friday. The amount of times PVI gets ripped on a Friday, it's pretty remarkable. And that's the same thing with your OPM trades. Just know your OPM trades are inside PVI. So when you go to NVIDIA right here, and we're looking at 131 is gravity point, 132 is NVIDIA's PVI low is 116. So if we ran PVI, which we very well could this week, if we ran PVI on any of these to the high side or low side, the PVI trades, I have no idea where the deltas are, but they're going to be somewhere between 3 and 7 on the put side, and they're probably going to be 2 to 5 on the call side. I would guess. I have no idea. I never look at it. But if we run PVI and you're sitting there holding a long call from OPM, I mean, you might run naked to the mailbox. I mean, Brent does that all the time, but the rest of us might do that just for shits and giggles. And that again, that's the world we live in. You got to take some risks to get rewards. OPM is just a comparison tool, but it gives us where the values are. The ones I would look at, if I was using the PVI spreadsheet, you guys can do it. I know it's getting late. But again, if you can find, and there are none, right? Tesla was white on OPM, but expensive. But if NVIDIA is, shoot, we got a home run here. So NVIDIA, over here, the volatility components are wider than the options components. So NVIDIA is undervalued relative to the index ETF QQQ on OPM, right? But it's also the options have not priced in. Here's PWG, 121 low on PWG. The options are pricing a move to 127. Hot damn. The call side, the option or volatility is suggesting 162 all-time highs. The options are priced in as it's only going to move to 156. OPM is inside that. If we run OPM, we're going to outrun that. We're probably going to go all the way to PWG. So if you go in there, NVIDIA was, somebody remember 116 and 168. I love doing this. This shit's so fun. Because you don't know, but all we have is stats. But the stats, okay, 168, and then the put side was 116. So if we get there, my goodness, if your puts go, if you got the 132 puts or the 133 puts and we drop all the way to PVI low, 116, you just made $17 a contract. If we run to 150, your call side, and we run to 168, $18 per contract. Now, are we going to breach PVI? No. Maybe. You go back and look at, go back and look at the math. Did we breach here? Tesla did. Lowe's did. Did we breach here? Netflix did on earnings. Did we breach here? Tesla did again. Did we breach here? ExxonMobil did again. No breach of note. Breach here. What about that one bad week? What about that week? Did OPM make money? I guarantee you OPM made more money. I guarantee you OPM made more money. This was Microsoft. You wouldn't have had it. Wouldn't have been blue. NVIDIA was blue. Anything post-strike was blue. Amazon was blue. And NVIDIA was blue. You made more money here than you probably lost. Well, we didn't lose on PVI. So again, this is we win PVI and we win on, again, if you ever see these models breach, OPM printed money. How about that week? I mean, could I get a little bit more open? But look at this. Look at the ones that didn't breach. The tech generals. Nobody made money that week. OPM didn't make money that week. OPM didn't make money this week. PVI didn't lose money this week. And so this is why I said, if you get to a spot where you actually can trade enough PVI or Case's thing or Moose's thing, whatever it is, and you can take some of those premiums, and instead of take those premiums to the bank, you can take some of those premiums and reinvest them into OPM trades. It might not be a good week except for the 1 week when SPX breaches PVI or crosses right at it, and you might make $1 or lose $1 on PVI, and your NVIDIA stock printed $13 calls or puts. And then you're like, well, give up 1 to get 13, sign me up. All day, every day, right? So I don't know. Again, that's just all I can kind of go through. I don't know if it's explanatory, but man, I'm excited when PVI is way outside OPM and OPM is extreme value relative to the QQQ, and it's on a big week where we know we're going to have movement. We got earnings, we got QRA announcement tomorrow, we got JOLTS Wednesday, we got PCE, we got non-farm payrolls, we got the election. Stupid shit's going to happen leading, the last 7-8 days going up to the election, as it always does. The market's going to move. Our job is don't stay wrong. And don't assume just because we start off one way on Monday that week's going to go that way, because that is probably not going to be the case this week. I think both sides are going to have great opportunities to make money. I think you'd be crazy not to secure some call debit spreads and put debit spreads on ES or SPX. Again, I would trade more towards weekly demand and gap fill. ES, buy a put debit spread at buy trigger for today. But don't buy tomorrow's. Buy it for Friday. Buy to buy trigger. And if you can't get buy trigger, go to sell trigger. But don't pay more than $1.25 for a 5-wide. Why? Everything has to be in balance and perspective. And $1.25 for a 5-wide debit spread is good value, especially for your indexes. That is good value. And if we close above or below weekly supply demand, you're going to make $5 on a $2.50 investment. The last I checked, that's 100% return. And you're probably going to have a pretty good week if you start off getting 100% return on a debit spread that's a passive type trade. Again, if you're working and you can log in tomorrow morning and you can grab an NVIDIA strangle for, what do we say, $1.50, and you can grab a Lam Research strangle for 60 cents, and you can grab a strangle on Super Micro. Not that it's going to move, but again, Coinbase has it, and so maybe Super Micro is going to move off, the tech earnings. But again, you're talking 40 cents and 55, so you're, 95 cents, 95, $1.50, and 60. You're basically at $3. Are they guaranteed to pay? No, they're not. I would caution everyone in here. I know if you're PDT, it's a different beast, but I would caution everyone in here. Do not put the strangle together and buy one strangle. Buy the long calls, buy the long puts, so they're not paired and your broker won't let you close out one side, not both. You do not want to have to close out the entire strangle at once. It'd be really, really cool to see us blitzkrieg on Wednesday with earnings, sell the calls, hold the puts, and then all of a sudden PC and non-farm payrolls come ripping back the other way and you get paid on both of them. Just manage your risk. But for the love of God, guys, do not size up. Don't think, oh man, this is a home run. No, it's not. Just like I tell y'all, don't size up on weekly supply demand. The week you guys size up will be the week we don't move outside it. And again, you're just playing for the close. You're basically putting on a pin for Friday that we're going to close below weekly demand or above weekly supply. And if we close inside it, then that trade goes, that $250 you spent goes right down the toilet on SPX. But if it does go down the toilet, how about your PVI trade? That's free money. That's how they're complementary. And that's why that passive hedge, that passive trade is the first step in hedging PVI. Number one. Because I'm like, hey, I can put a trade on. I don't have to manage it. If we close above weekly supply, I make 100% return. If we close below weekly demand, I make 100% return. If we close in the middle, I lost my 250, but I made money on my PVI. Now, if you spend too much money on those debit spreads, you might not really make money on PVI. You might have lost money. And you guys know I am very anti losing money at the start of the week. So if I can get paid $1,500 tonight for selling PVI on my personal portfolio, would I turn around and put $750 into OPM tomorrow morning at the open? Absolutely. I'd put half the money in. Because here's the thing. If you have to manage PVI because you're clinching, I guarantee you your option pricing model trade is printing freaking buku bucks. Buku bucks. We never have SPX pushing PVI and the individual stocks, especially the individual stocks in the NASDAQ, sitting all quiet. They're moving. They're running like scalded dogs. Especially when you got earnings all this week. So, again, I don't know that we can get in OPM tomorrow morning. I'll talk about it at the open tomorrow. But I'm not going to share my trades. I'm not going to share exactly what I do. But you guys have it right in front of you. And again, what I just did tonight with you guys, this is usually what I would do at 4:30 in the morning tomorrow on Monday morning. If I'm not trading futures, I'm looking at my option pricing and I'm looking at the charts like we just went through, and I'm making mental notes and I'm starting to rank order. These are the charts that I'm most interested in. These are the OPM trades I'm most interested in. If I got to make a choice between NVIDIA and SMCI, I'm taking NVIDIA. If I got to make a choice between, Lam Research or Tesla, I don't know. We'll see. I'll do Lam Research because she's been good to me the last 2 weeks. And she's cheap. Again, there's nothing like cheap exposure. I mean, seriously, it's like going in and buying something at 60, 75% off, holding the damn thing for 5 days, and then go and returning it without a receipt and getting a 100% retail refund. I know some of y'all done that. Or go buy a dress for a wedding, go to the wedding, come back, put the tag back on it, and go return the dress. I know some of y'all done that. My wife's done that. That's what OPM is. Let's find value and how can we exploit it? All right, that's it. Anybody got any questions? But you got to do your homework on checking. You got to do your homework. I know POTUS asked a couple questions earlier and I got on to him, but man, it ain't free. Do your homework. It's there. All the data's right there in front of you. All right, guys, I am out. Peace. And we'll see y'all tomorrow.